Hello everyone, I welcome you to National Resource Center, Sriram College of Commerce, University of Delhi. Today I shall talk about social stock exchanges in this module. This module comprises a new concept, social stock exchange, in contrast with conventional stock exchanges. We all know what a stock exchange is. It is a platform to trade financial instruments, and the value of these financial instruments depends on the future earning capacity of the issuing entities. In the social stock exchanges, the value of instruments like shares depends on the social impact of organization or the company on the society. A social stock exchanges is a platform on which social enterprises, volunteer groups and welfare organizations are listed so that they can raise capital. This is a revolutionary concept to provide an avenue to these organizations so that they can approach and tap the reservoir of investors for capital. We all are aware that one of the main concerns of the society has been to remove poverty and transfer the benefits of economic growth to the last person in the line. Social stock exchange will constitute a big step in that direction also. However, before one can understand what a social stock exchange is, two terms, social enterprises and impact investment, needs to be understood. So what is a social enterprise? A social enterprise is a revenue generating business, but with a difference. Its primary objective is to achieve social objective. It does not ignore or shun pursuit of profit, but its primary goal is social service while pursuing social goals. The social enterprise does not do away with the profit because it ensures the sustainability of the entity. The cornerstone of the philosophy is that even social enterprise can be highly profitable. In fact, most social enterprises look and operate like traditional businesses. The thrust and focus is that the profit these entities generate is not used for payouts to investors, but it is reinvested into their social programs. A continuous flow of profit helps the social enterprises and plan and execute long-term programs and bring on board required technology and professionals. Profit which makes social enterprises sustainable differentiates them from charities. Charities also have a social mission, but they are fully dependent on donations. An example of a social enterprise is Bangalore-based Selco. This is an entity involved in the delivery of last-mile sustainable energy solutions. Selco says it has maintained modest profits in the last 8 years with growth rates at an annual average of 20%. It has reinvested its profits back into the company. Selco views energy access as an underlying precondition to facilitate progress related to health, education, livelihoods, financial inclusion, and so on, leading to overall improvement in quality of life. It understands the root of problem within context and then assesses how energy can resolve it. The investment by social enterprises is described by a different term called impact investment. As the term suggests, impact investment is the investment made into business with the aim to make a noticeable social, economic, and environmental impact. At the same time, it generates a wide range of returns ranging from profit to publicity, to creating awareness, to educating masses, etc. Let me share some interesting numbers with you. Now, numbers may be appearing tedious to you and boring also, but they will give you such a deep insight about the impact of such funding and investment. Plus, it will give you some rich information. You will be surprised to know the volume of impact investment in the country. So globally, if we talk about global world, around 1,300 organizations manage $502 billion in impact investing assets. Global Impact Investing Network says. Impact investments are growing in India too, and in last 6 years, between 2010 and 2016, the impact investing sector in the country attracted over $5.2 billion. That is approximately 36,000 crores in Indian rupees. It's huge, isn't it? Over $1.1 billion, that is 7,700 crores approximately in Indian rupees, which was invested in 2016 alone. And this investment is growing at an annual rate of 14%. Now, another interesting part is that according to a broking survey, a majority of impact investors surveyed, and amazingly around 67% said they achieve above market returns. Now, for this particular survey, market returns were assumed to be 12.5%, and the results were consistent with the surveys carried out by Impact Investors Council and McKinsey too. Therefore, the impact investing sector is likely to continue to grow, which means that the volume of investment may also increase. A large part of this investment will fuel social enterprises, and this is where social stock exchange comes into the picture. We need to have a separate stock market where we don't go to make money, we go there to change the world. We go there to address a problem a society has in common. And suppose some companies and common people are doing it. So if we want to invest after liking their work and its impact over society, we can invest for such a cause. Analyze all the positives and all the negatives. Have a pilot testing about such system and then invest. Now the question arises, how would such a social stock exchange will function? Such platform would function in the same manner as a normal stock exchange does. But such platform will be created to serve the society, generating source from the society and giving back to the society in form of welfare, upliftment through providing great infrastructures like roads, schools, hospitals, etc. This will be considered as pursuing social cause without socialistic ideology. In such a system, we can buy shares, we can sell such shares, but we don't need any dividend from that company or organization, which is listed on stock exchange, which is listed on social stock exchange. It's the pleasure we get from helping through investment that we enjoy. All the companies have CSR fund not used properly. Why don't we use half of the money of CSR funds for social business and set up a separate wing of company which is totally dedicated towards social welfare? So this will be a business owned by investors, but such business will continue to focus on the things that they eagerly want to see happening. Because we are not touching any company's funds, so there need not be any problem. Groups or institutions or companies or people creating funds in the form of debt, equity or mutual funds will be benefited through social stock exchange only. Social stock exchange and electronic fundraising platform will be created with regulations of SEBI to list all the NGOs, self-help groups and any institution who wants to do social help in any sense of for the welfare of the society. Now, government in present considers that we need special donors in the form of investors to lead social campaign to help the society. There has always been a question over funding of NGOs and other social institutions and non-profit organizations as well. When such organizations and NGOs are listed over such social stock exchange, it gives transparency about source and usage of such funds. Finance Minister recently in her budget speech, Mrs. Nirmala Sitharaman, in the budget speech announced that the government plans to create a social stock exchange, a platform on which social enterprises, volunteer groups and welfare organizations will be listed so that they can raise capital. The proposal has attracted much attention and social entrepreneurs, among others, have said that the move can have a revolutionary effect on how they tap investors for capital. Now, what does a social stock exchange do? Envisioned as an electronic platform, and social stock exchange will bring together social enterprises and impact investors on a common platform, as we talked about. A social stock exchange broadly is understood as a platform that allows investors to buy shares in a social enterprise that has been vetted by the exchange itself. The social stock exchange provides access to the world's first regulated exchange dedicated to businesses and investors seeking to achieve a positive social and environmental impact through their activities. On this platform, investors, like in any other stock exchange, will be able to buy shares. So shares buying means basically trading of securities or potentially debt in the form of bonds, etc., of listed entities. In this case of a social enterprise which has a mission aligned to their interest, on the exchange, a listed entity's value will be listed to its social impact. So that means there will be some point system, which means points will be awarded to social enterprises on the basis of social impact it has left on a society in a positive manner. The more the social impact a listed organization creates, the more points they get. The more the points they get, more is the share value with them. And when the value is larger, finally which leads to greater funds. There are only a few international examples as they follow different models. In London, it acts more as a directory connecting social enterprises and potential investors. It was launched in 2013. It only accepts companies that pass its independent assessment on social impact. While in Canada, the SVX is an online platform where even retail investors also can invest in funds, or companies with social fundraising platform, but the precise nature of its functioning is not clear. Whereas in Kenya, Social Investment Exchange, launched in 2011, connects vetted social enterprises with impact investors, both foreign and domestic. A listed social enterprise has to demonstrate social impact as well as financial sustainability beyond the funding period. This will be helpful in a number of ways. Firstly, India's social enterprises ecosystem is growing fast, but in a recent survey conducted by the British Council India on the status of social enterprises, 57% of the entities surveyed said that access to debt or equity is a huge barrier to growth and sustainability. They find it very difficult to overcome this barrier. However, this barrier can be overcome by bringing social enterprises and investors on a single platform, and solution is social stock exchange. Secondly, a social stock exchange will not only give social enterprises access to capital, but will actually make the exercise much cheaper for them by standardization of the process and does away with the need to engage and negotiate directly. Thirdly, impact investors want measurable delivery, but over 27% impact investors in India, according to a Brookings India survey, says finding impact measurement difficult. At least 25% said that finding high quality investment opportunities was a challenge. Despite the development of tools such as the global impact investing rating system and impact reporting and investment standards, and evaluation and monitoring the impact of investment and social returns remains a tricky issue. Challenges faced by Indian impact investors, again according to Brookings India survey. However, for social stock exchange stakeholders, will develop a framework for monitoring of impact and social enterprises. Accessing the platform for capital will be vetted before listing, thus ensuring quality and eliminating some of these issues. In simple terms, listing on social stock exchange will be a seal of quality for a social enterprise and would provide investors confidence that due diligence has been undertaken. Fourthly, in the same Brookings India survey, over 44% of impact investors surveyed identified Finding suitable exit options as a challenge. So lack of liquid market place means the investors will be overly cautious, resulting in net investment going down. As a solution, social stock exchanges offer exit routes. Fifth, easy and cheap capital means that the dependence of social enterprises and welfare organizations will not be dependent on aid from private foreign donors, which comes with strings attached in most cases. Recently, the Narendra Modi government has been cracking down on non-government organizations after intelligence agencies accused NGOs such as Greenpeace, Code Aid, Amnesty and Action Aid for reducing India's GDP by 2 to 3% per year. Over the last few years, the government has acted against 13,000 NGOs till 2019, and this in turn says Brain and Company has led to a 40% decline in the flow of funds from external sources. Sixth, given that listing on social stock exchange would involve regular audit of impact that social enterprises create, it will promote competition between firms and encourage market discipline. The securities of the best performing social enterprises will carry a premium, and in turn, the companies that are not efficient will be penalized by the market. 7. Establishment of social stock exchange will help the rapidly growing impact investment market in India to become a more regulated capital market. The proposed social stock exchange will be regulated by the Securities and Exchange Board of India. 8th, as impact investment becomes more accessible with the help of social stock exchange, money flowing into sustainable development would increase, reducing the burden on the government. If developed with the right framework, social stock exchanges can emerge as an important channel for international development finance. Now, when we have talked about benefits, why not see some limitations too with Indian perspective? So let us move forward with the limitations. While ironing out the details, one of the government's priorities should be to define social enterprise. The first thing the government needs to decide is how to distinguish between a social enterprise and a normal enterprise. The criterion doesn't exist in India. While setting up an exchange is easy, the challenge lies in making it work and creating liquidity. No, not everyone is convinced that a separate stock exchange might be the best way to improve access to capital for social enterprises. They think both India and our sector would be much better served if the small medium enterprises exchange could be up and running properly. Considering all these social enterprises are actually small medium enterprises only. To them, that's more viable than creating another impractical exchange. There is less clarity about a new stock exchange will help raise capital for voluntary organizations. If it is applicable to Section 8 companies, this will include BCCI, one of the richest sports bodies, and every money-making private school. We don't know the framework yet. With the government distrustful of foreign donations to non-profits, the exchange might help the sector generate more capital. Have other countries tried social stock exchanges? And do they actually work? Many social stock exchanges have emerged across the world over the last 2 decades. Brazil was the first country to have a social stock exchange. It was set up in 2003. Since then, many countries like Canada, the United Kingdom, Singapore, South Africa, Brazil, Kenya have also followed with their own models. Most of these came up in the first few years of this decade. One of the most successful social stock exchanges is in Singapore. It is known as Impact Investment Exchange Asia. It was set up in 2013. This social stock exchange is helping raise an impact investment capital of around $40 million per year, and it has built a network of over 30,000 partners. The UK's social stock exchange, which was also set up in 2013, has started delivering now. In 2016 alone, its members raised £400 million for, among other things, affordable housing, clean energy, and new healthcare facilities. Therefore, a number of countries have tried developing social stock exchanges, and they have worked too, but a lot depends on the framework, and little is known about India's plans so far, because Finance Minister in her budget speech has simply thrown the idea of setting up social stock exchange. Studying successful social stock exchange models around the world should be the first step in development of India's own social stock exchange. In Canada, for example, the social stock exchange is an online platform. It allows investments in Canadian companies and funds that have a positive social or environmental impact. Retail investors are also allowed to participate. The social stock exchange in London functions more as a directory connecting social enterprises and potential investors. It was launched in 2013. It only accepts companies that passes its independent assessment on social impact. The Kenya is known as Social Investment Exchange, which was launched in 2011. It connects vetted social enterprises with impact investors, both foreign and domestic. A listed social enterprise has to demonstrate social impact as well as financial sustainability beyond the funding period. We can hope that it would be easy for companies, non-profit organizations, NGOs, and other institutions to raise funds to leave an impact over society in a positive way. They'll be able to raise funds in the most smooth manner by creating such facilities like social stock exchanges. What shall be the structure of such platforms? Who should and how should they regulate the functioning of it? It can be suggested that the regulation should be similar to the conventional stock exchanges, but their special needs must be kept in mind. A few rules can be proposed here for further debate and discussion. First, social purpose businesses can join the social stock exchanges as members and pay a fees for membership. Also, they should pay a nominal fee for any capital they raise via the exchange. All the members, whether a company or NGO or person, must meet a rigorous set of criteria before joining. In London Stock Exchange, a test has to be passed before an individual can gain its membership. Also, there can be a provision for presenting a social impact report, and this report should be assessed by an independent admissions panel. This panel will have the responsibility of verifying the business's social or environmental purpose presented in the report. In addition, all members should be required to publish and submit social impact report on an annual basis to demonstrate performance against social impact targets. These reports should also have year-on-year improvement in the standards and targets they set for achieving their social impact. It would be desirable that reports listing achievements must provide verifiable evidence of their work. The impact methodology should be based on a performance log and does not require a mission or asset log. A unified platform can bring in greater transparency for non-profits and help both individuals and corporate sector evaluate organizations they would like to give money to. Such a platform can help both discovery of organizations and in impact evaluation, which is otherwise expensive also. In that end, I must conclude with a positive note that the fund channeling capability of social stock exchanges for the purpose of social upliftment of society will certainly be a game changer for those who have fire to do something for the society but lack resources. That's all. Thank you.